to a major calamity for the economy. 30 more seconds? No. No.
Let's go to the next question.
Say a couple things on this.
Next question. We want to be sure we get him on. Yes, sir.
Yes, Peter, as a lender, myself, and a property owner, and also a writer about real estate and what's going on, should I just slip my wrists?
Well, no. I mean, there's no reason, there's no reason to slit your wrist. I mean, this is what's going to happen. But, the statistics, I want to get, the fundamentals here. The idea that there's all this demand for second homes, right? Second homes are in demand because people buying them are buying them because they think they're going to get rich on them. The reality is the demand for second homes is going to collapse. All these vacation homes are going to come on the market when people realize that it's cheaper to stay in a hotel when you take a vacation than to buy a piece of property. Also, all the home construction that's going on is being done by public builders who are building homes to maintain their stock prices so the insiders can keep selling shares even though there's no demand. You can look, I'm living in New England now. There are for sale and for rent signs all over the place. I mean, there are so many unoccupied homes. If there really were a shortage, I mean, there's so many homes, no one has never lived in them, no one's ever gonna live in them. They're empty houses. You can rent where I am now in New England, I know in California, houses that appraisers will tell you are worth $4 and $5 million. You can rent them for $6,000 and $7,000 a month. It is absolutely ridiculous. And the people who wrote that, whatever you were reading, are not looking at those fundamentals. This is a huge, huge glut. Prices are going to collapse. All you can do, instead of slitting your wrist, you can say, look, this is what's going to happen. So what can I do? How can I change my business, in advance of what's going to happen? Rather than just being surprised by it. I mean, obviously there will be some opportunities, but look, this industry is going to change. A lot of people were stockbrokers in 1990, 2000. A good friend of my mother's was a shoe salesman all her life, and she got a job at Merrill Lynch in 1998. She was selling tech stocks. One day I called her up and I said, Carol, here's the name of some good oil stocks. Why don't you recommend these oil stocks to your clients? And she said, well, look, I'm a technology broker. I don't buy oil stocks. I said, well, what do you know about technology? You're a shoe salesman. I said, do you know what the PEs are in those tech stocks? And she said, well, PEs don't matter. Of course, she's baking cookies now. She doesn't work at Merrill Lynch anymore. So a lot of people came into the mortgage industry in the last 4 or 5 years. They're not going to be in this industry in another 4 or 5 years. But obviously, some people will be there. I'm still a stockbroker. There are still stockbrokers around. But you have to understand how you can reorganize your business and what you can do differently in light of what's going to happen.
I think that's what we're looking for, Barry.
Peter, I think the audience has to understand that what Peter's doing a bit is in the vernacular of he's selling to the book. His company, Euro or whatever, is big into commodities, gold, and currencies. So it's in Peter's great self-interest that people look at commodities, gold, and currencies. Maybe a few other things, but that's the biggest part. So I understand that's the prism by which he views the world. Now you can prove anything that you want with statistics one way or the other. So there's no doubt about that. We have to understand where he's coming from. And by the way, my gut feel about that is very risky. A portfolio of commodities, currencies, and gold is a very, very risky portfolio. We've just come through a 4 or 5 bull market in commodities. And so he's trying to tell us that it's probably going to go on and on. And I would suggest it's not. Look at Peter's very upset about $70 a barrel of oil, etc. The point is, $70 a barrel for oil is not the problem. $70 a barrel for oil is the solution. Why? Because markets respond. $70 a barrel of oil brings in all kinds of alternatives. And so what he's saying is oil prices are now came down a little bit, but back up. I don't think so. As a matter of fact, I think they're going to continue to move down. Why? Again, that's how markets work. Now, have some mistakes been made with those low interest rates? Of course they've been made. Is there a bubble in some markets? Perhaps Phoenix, Southern California, Florida? No question about it. Did my aunt pay a big price by putting all her money in one technology stock in the late 90s and call me and say, I'm a millionaire, and then all of a sudden, she's not a millionaire, she's in poverty? Of course, that happens. There's going to be some people that get burned on this thing, the ones that Peter described. There are going to be some people that are hurt. But as far as the longer term, to imply that America isn't a producing nation, my opinion, just is not factual.
All right, I'm a mortgage broker.
Real important, because I take exception to that comment about my talking my book, or somehow that what I'm saying is influenced by my investment approach. My investment approach is dictated by what I believe. I own the company. Euro Pacific Capital recommends whatever I want. And so if I was bullish on the U.S. and I was bullish on technology stocks, my clients would be loaded up with Cisco and Microsoft. In fact, I would have made a lot more money during the 1990s when all my friends were getting rich, telling their clients to buy all the dot-coms. I was taking the hard road. I was telling people, no, this is wrong. You don't buy these stocks. This is a bubble. That was hard to do. I talked people out of that. And so my firm reflects myself. And I'm just, the fact that I've been recommending for people to buy foreign stocks for the last 8 years, and the fact that they've made 30 or 40% a year doing it, is because of my foresight. And believe me, the minute I get bullish on the U.S. market and the U.S. dollar will be the minute I stand up here and tell people to buy U.S. stocks. My firm is not, it's not like all I can tell people to do is buy oil and gold. The fact that I told people to buy oil when it was at $17 a barrel, or gold when it's $250 an ounce, is to my credit.
Well, let's bring
but
this
I'm not,
back, if you would,
it's
Peter.
not like I'm, but he's saying I'm
I understand your rebuttal.
I'm not.
Let's bring this back to this group. I'm a mortgage broker. I'm from Phoenix. I own 4 homes. Do I slit my wrist before I leave here today? Or, Barry, do I expand my business because I'm going to need more loan officers and I'm going to need to train more people?
Well, I surely cannot say you want to expand at this time. There's no question that there's going to be some softening in the economy in the year 2007. And a big reason why that economy is going to soften some is because of the very thing that Peter is talking about. We will pay a price. I would argue it's not going to come nowhere near the severity of what Peter shared with you. So I think you would all do well to invite us back next year, and the year after that, and the year after that, because we will watch this thing play out. The problem, Peter, that I have is when you say things like you do about Greenspan and other people, and people in the market, you're saying that they don't adjust. That's exactly what markets are about. We will now go through adjustment. We are going through, and there's no question there's a softening. There's no question that 2007 will be a little bit of a weak economy, but understand something. We have just once again come through 12, 14 quarters of 4% growth. Now let me put that in perspective. Under the Ronald Reagan years, it was 3.4%. Under the Bill Clinton years, it was 3.6%. I mean, this economy is humming. The fact of the matter is people want to come here. The fact of the matter is the automobile plants throughout the world want to locate in America. Right now, out of Jackson, Mississippi, Infinity built one of the biggest automobile plants in the world. Just out of San Antonio, Toyota is building one of the biggest automobile plants in the world. Why? We're producing 1/3 of the world's wealth. That is why.
Right.
And the point about outsourcing, look, a comparative advantage says that if China can do some of the manufacturing, let them be. Don't tell me that China could do that without our banking and our technological skills when it comes to investment and so on. They rely totally on us.
Thank you. Now, Peter, what should I be doing with my mortgage company right now?
You should put, you should put the houses on the market, and if you could find someone dumb enough to buy it and someone dumb enough to finance the transactions, you should sell. The fact of the matter is, the economy hasn't been humming. All we've been doing is going on a consumption binge, just like the heroin addict. These numbers are false. All they're measuring is how much wealth we're dissipating, not how much we're producing. We're borrowing money from the Japanese and the Chinese to buy the products that they produced on credit. We are going to go through a painful correction. Anybody that thinks that we're going to go from such a wide, out of whack imbalance, and all of a sudden we're just going to turn a little switch and it's going to be like a little, not a big deal, is fooling themselves. It's, just like when people told me, when I said the NASDAQ's going to drop 80 to 90%, of course I was right. Oh, no, it's